Yes, I want to touch today on the some of the themes around Bitcoin, and in particular, I thought it would be interesting to compare the landscape as it was back in sort of 2016, 2017, when I was first covering this topic, and how things have evolved in that space between then and 2023, which is where we are now. So let's just start with price quickly. I just want to show the general shape of the price trend during that period. I actually, to be honest, I find that the price aspect of Bitcoin the least interesting aspect of it. For many, it's the most interesting aspect because it's the thing that either makes them a fortune or loses them a fortune. We can see obviously that it's been incredibly turbulent, and so during 2020 and the pandemic, the price absolutely exploded. It collapsed again a couple of times, and this is all sort of, it's all caught up in the unprecedented sort of global economic drivers that we've seen in that period. So that's the general shape of the price. We're currently around about $30,000 per Bitcoin. Some of the sort of interesting events on this time frame. Obviously, we had the pandemic back in 2020. In 2021, there was a significant development wherein in China, China banned the mining of cryptocurrencies in 2021, which also had a significant impact on the price of Bitcoin at the time. We had the FTX scandal back in 2022, which had some impact, but not a huge impact on the price, which has since then recovered. So that's just an overview of what's happened to the price. All right, so moving on to volume for a second. So one of the cool things that I liked back in the day to do was to download the full Bitcoin blockchain and have this idea that you can run a node locally on your laptop, and you've got the entire transaction history of the entire currency on your laptop, and that was fairly straightforward on an average laptop back in 2016. What we've got here on the blockchain.com is the graph of the essentially the footprint of the Bitcoin blockchain and how that's grown. The price is obviously is shown superimposed in black here. So back in 16, so we had a blockchain size of roughly 60 gigabytes. It's grown now to what is it? So roughly about 475 gigabytes. So I suppose theoretically it's still technically possible to essentially run a full node on your local laptop, which requires you to have the entire blockchain downloaded. But obviously the size of the typical hard drives on your laptops or desktop computers has also to some extent grown since then, but certainly not at that rate. And I think it's probably increasingly difficult to the idea of keeping a full copy of the blockchain on a standard personal computer. And obviously the reason why the footprint of the blockchain is increasing is just because roughly every 10 minutes a new block is mined on the network, and that block also contains all of the transactions that make up the block. So every Bitcoin transaction and also the blocks in which they are ultimately mined into form that data set, which is growing at what looks to be an almost linear rate, as we can see. So that's the blockchain size. Another interesting volume metric is the amount of Bitcoin in circulation. So on this graph here, we can see the number of Bitcoins. So in 2016, we had roughly around about 15 million Bitcoin in circulation, and that has risen to the present date to around about 19 million. So a couple of interesting points here. It's no surprise that the amount of Bitcoin in circulation, not the value. This is not a sort of a market cap thing. This is just the number of units of that currency. The reason that's has obviously expanded since 2016 is because every block that gets mined, which happens roughly every 10 minutes, results in new Bitcoin being generated and circulated into the blockchain. However, it's not a linear process. So even though the block height is more or less a linear process, in the sense that the network tries to keep the frequency of the new blocks to around about every 10 minutes, the mining reward, so the amount of Bitcoin that the successful miner for that block gets, is set by the protocol to sort of gradually decrease over time. So that's why we see that the amount is increasing over time, but it's increasing by a slower rate, and that will effectively essentially converge to the 21 million, which is the hard coded upper limit of Bitcoin, which we probably have all heard of already. So let's have a quick look at the energy consumption side of things over this time period. Much has been said about the energy expenditure of Bitcoin, and it has its outspoken critics, among them Elon Musk, who I believe withdrew the support, or at least the payment mechanism for Tesla products until such a time as the Bitcoin community can demonstrate a more sustainable way of generating the electricity required. So it's quite interesting to have a look at the comparison between the amount of energy consumed by the Bitcoin network against the amount of energy consumed by some well-known countries, just to put things into perspective. So you can see here on this top graph that the Bitcoin actually consumes more energy than the entire countries of Belgium, Philippines, Kazakhstan, only slightly less than Netherlands. And if you look down here, you can see that the energy expenditure of Bitcoin corresponds to approximately 40% of the energy output of Australia. So not to say that the Bitcoin is causing that consumption in Australia, but it's just to compare the amount of energy consumed by an entire country and comparing it with Bitcoin, and you can see that it's a huge amount of energy. The amount of electricity consumed by the Bitcoin network is largely driven by the difficulty set by the Bitcoin protocol to generate the next block. The electricity is expended by the miners. The miners are essentially, as we've discussed in previous videos, they are looking for a hash that meets the difficulty target in order to be able to claim the reward for the next block, right? So the more stringent, the more difficult that difficulty target, the more computing power the miners have to expend in order to be able to mine the next block. Okay. Now this graph here shows an estimate of the minimum energy expenditure of the network over time. One interesting thing can be seen here in 2021, around about June 2021, is that the estimate of the energy consumption, which is driven by this hash rate, fell quite sharply, and this was due to the legislation in China that banned crypto mining in China. So what happened in July 21, around springtime 2021, was that the number of miners in China rapidly decreased. So what happened at that point then is that the amount of miners worldwide competing for the next block reduced massively. So at that point, what would have happened was that in general we would have seen that temporarily the amount of time taken to generate the next block would have increased, right? Because you've just got less people playing this hash lottery. So So what the Bitcoin network would have done at that point is to relax the difficulty target to meet the new number of miners, right? So in order to essentially to speed up the block generation again. But certainly, so after the disappearance of those Chinese miners at that time, certainly led to a temporary reduction in the amount of energy consumed by the overall Bitcoin network. That energy has now, obviously that consumption has now risen again, and we are basically at sort of peak energy consumption. It's worth pointing out, this is another chart that shows the hash rate since 2010 to the current time, and it shows that the hash rate overlaid on top of the price. The hash rate again being that sort of indirect measure of how much computing power and therefore ultimately electricity is going to the network. In black, you've got the price of Bitcoin, and in blue, you've got the hash rate. And you can see that there is in certain periods that there's certainly a correlation between the two, and it's worth contemplating why that correlation might exist. Well, it really comes down to incentive, because if you think about it, when the price of Bitcoin starts to increase dramatically, the incentive or the reward for new miners or indeed existing ones to invest in increasing their computing power, to buy more hardware, to spend more electricity, that incentive grows because the reward for mining a block successfully has gone up, right? So as more people join this race, right, to get the next block, clearly what the same thing applies, right? So the speed of block generation will increase because somebody is going to solve that hash quicker because there are so many more people rolling the dice, right? So yes, so as the price goes up, more people are going to join this race and try to be the next miner of the next block. But obviously what Bitcoin, the network, will have to do as part of that self-calibrating mechanism that says, well, there are more people mining now, so the blocks are now getting generated quicker. We're going to have to increase that difficulty target again to make it more difficult to mine the next block. So that, to some extent, explains why there might be a correlation between the Bitcoin price and the hash rate and the energy consumed in the network. I just wanted to talk a little bit about the adoption, some of the events that have happened around the adoption of Bitcoin in various use cases in that intervening period. Excuse the scrappy notes here. I've just made some general notes that I want to talk through. So we have seen several cases of Bitcoin being accepted by very well-known retailers over the last few years. So we've seen, just to name a few, there are many more, but we've seen AT&T, Microsoft, Tesla, Whole Foods, all accept Bitcoin as a form of payment. My perception is that a lot of the stories about adoption here, it's been a bit of a sequence of stories about companies sort of trialing out Bitcoin or promoting it in a particular region, sometimes withdrawing it altogether. Lots of companies withdrew support for Bitcoin during the sort of highly volatile periods. Tesla in particular. So Tesla, they made a very large investment in Bitcoin and enabled Bitcoin payments for their vehicles, but they since withdrew that support because Elon Musk had severe environmental concerns about the energy consumption that we talked about earlier. But apparently, so I haven't actually tried this myself. I'm not sure if it's the case in the UK, but apparently Whole Foods enables Bitcoin payments, and Microsoft's online store accepts Bitcoin. Again, I'm not exactly sure for which products. In each case, these merchants are still, for tax purposes, they're still having to record the receipts in Bitcoin in their local currency and record it as income, and they still have to pay income tax on that income at the time of purchase. And then if they hold that Bitcoin on their balance sheet, then and then liquidate it at a later date, they also have to pay capital gains tax on that. So it's worth also contemplating if you go buy coffee. And I've seen this in London. There are several small restaurants and coffee shops that sell in Bitcoin, but the price of the coffee is fixed at a local currency rate. It's just that you can use a Bitcoin wallet to effectively convert your Bitcoin reserves into that fixed local currency amount at the point of payment. So it's you could debate whether to what extent that really represents Bitcoin adoption, because the costs going into making that coffee will be mostly incurred in terms of the local currency still. The taxes, like I said, are still payable and paid in local currencies. I suppose so, and just to sort of contemplate for a second whether, for example, one of the original goals of Bitcoin was to sort of protect against currency debasement, and therefore, I suppose, implicitly to protect against inflation. So if one could conceive a situation where, for example, if the price of coffee rose during the year from £5 to £7 due to the types of inflation that we're currently experiencing, certainly in the UK and I guess the rest of the world, then it's not inconceivable that the price of Bitcoin may rise in response to that inflation as more people pile in to protect themselves against that inflation. What that would therefore mean it would be that the holders of Bitcoin, by virtue of the fact that the price of their holding has increased in that time, would have actually effectively seen themselves protected against the rise of that cup of coffee in Bitcoin terms. So yes, so for holders of Bitcoin, people who actually buy it in order to buy coffee, as long as the price had risen in response, as in the price between US dollars Bitcoin had risen in response to, or in the intervening period between the dollar prices increasing, then they effectively would have protected themselves from the inflation in terms of that cup of coffee. So I think it's also so El Salvador it deserves a mention over here. So in 2021, El Salvador they declared Bitcoin as legal tender. So I believe that they have they also accept US dollars as legal tender and Bitcoin. This is a very interesting topic that probably deserves a separate video. It's been met with mixed reviews, both in terms of the investor community and also the local population. Certainly their debt has been downgraded, and their credit spreads, as in their cost of borrowing has also increased. So there are some people who say this is an experiment that is either not going well at the moment or destined to fail. Only time will tell about that. It's also worth mentioning that the adoption of cryptocurrencies in general, not Bitcoin, but so several countries, namely, or among them China, Japan, India, are in the process of or have experimented with central bank digital currencies, aka CBDCs. And again, that's a very interesting topic, which I'd like to potentially cover in a separate video. It's one that's been discussed at great length in the political circles, and there are many who are very, very concerned about the potential of this. And I think for those who understand what blockchain can and can't do, there are some obvious concerns about what the future might hold in terms of these CBDCs if they take hold. But it's also possible that in the event that any of these do get adopted and rolled out, then potentially that they could be a threat to the prospect of Bitcoin being adopted as a long-term medium of exchange, which was very much the intention of the creators of the framework, in my opinion. Okay, so that's a little bit about the adoption of Bitcoin. Obviously it's not comprehensive, and by the way, if anybody disagrees or has any comments about the extent to which they perceive that Bitcoin is actually gaining traction, please leave them in the comments below. I'd be delighted to hear your viewpoint. So just the last topic I wanted to talk to you about briefly is the security aspect of it. So there have been a few compromises of crypto exchanges in those intervening years. Some of them high profile, and in general the concept is that these are just standard security breaches, and if the data that is compromised happens to be the private keys of that are being held on the behalf of the depositors, then the associated cryptocurrency can and did get stolen and irrecoverably. That's one aspect of security, and there have been quite a few significant security breaches in the last few years. The other security aspect that is often talked about is the imminent threat, or the question about an imminent threat of quantum computing on the integrity of blockchain technologies. If we just have a quick look at a typical Bitcoin transaction which we covered in previous videos, we see that the network is essentially dependent on two key algorithms, right? So there's the elliptic curve digital signatures algorithm for the public private key encryption, so the asymmetric encryption, and then obviously the SHA-256 algorithm for hashing. So those two algorithms are key to the entire Bitcoin ecosystem, and there are lots of studies going on, academic studies, research into if, or more specifically when, the integrity of these applications or these algorithms, will be threatened by quantum computing. The basic idea that quantum computing provides so much more computing power than our classical computers that it's sort of mind-boggling how much computing that they can do in a comparatively short time frame, right? So quantum computing is advancing. One of the main talked about attacks that quantum computing might be able to eventually perform is to actually, for a given public key, to infer what the corresponding private key was, right? So that is currently obviously not feasible, but there is speculation that within X number of years, it may be possible to take a public key, and those public keys often appear unchanged or sort of like unfiltered or unhashed in certain transaction outputs. So if you have a means to take a public key and then infer what the private key is, then essentially you can spend whatever transactions are credited to that public key, right? So the question is, well, how far are we from a situation where quantum computing can potentially do this type of thing? Nobody really knows, but the general consensus is that we're still quite a long way from that sort of situation, and we're talking, at least 10 years. And if we have a look at IBM's roadmap, in terms of so from 2019 and beyond 2026, we can see that so currently IBM's latest quantum computer has 433 qubits, which is essentially a measure of the horsepower of their latest quantum computer, and they are predicting aggressive growth, right? But we're not yet in the territory where. So just to give some context, the sort of attacks that we're talking about being a threat to blockchain are potentially going to require millions of qubits, right? So we are quite a few years away from having a quantum computer that is capable of these types of compromises. Having said that, if we look at the incredible the incredible rate of progress in fields like AI, then it's difficult to say and to predict the level of growth that these technologies can undergo. It's also worth reflecting on the fact that these same algorithms, these same encryption, so asymmetric encryption, and same hashing algorithms underpin so much of the other infrastructure that the internet relies on, right? So all of the secure transactions you do with your bank, all of the encryption elsewhere uses the same stuff. So in the advent of quantum computing, we are going to have to find ways to find quantum proof encryption and roll those out. Now, it is interesting to contemplate, and this is kind of key to the whole blockchain concept, because of the inherently decentralized nature of any blockchain. Any change to, say, encryption protocols or the way things are handled has to be rolled out across the entire network. So it has to be adopted by all of the nodes that participate. Which is actually quite a significant challenge, and much more difficult than, say, one centralized body deciding that they're going to change the way encryption works. So rolling out a new encryption for blockchain, for Bitcoin in particular, will be quite a challenge. But it looks like it's going to be a number of years yet before such a challenge has to be undertaken. All right, so that was a quick summary of some of the overall trends and some of the events that have happened in those years since I first did the blockchain videos, and where we are now in 2023. I hope some of it was of interest and useful. Please comment down below if you have any questions or any requests for follow-up themes. I think some of these themes probably deserve a little bit more of a deep dive. So yeah, let me know, and thanks for watching.